The head of the Federal Reserve just said, "What? This is crazy." This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. This is your first time here to the channel. I encourage you to like, comment, and subscribe. Every single week, we post the weekly update to keep you informed on economic news and how that may be affecting your home buying or your home selling process. So lots to cover this week, and we're going to do things in a little different format. If you follow the channel, we're going to do some screen shares and try to walk through things a little bit different just to give some clarity on some things. So let's get right to it. First of all, I want to start with the charts because, we're seeing some interesting developments here. And I want to talk about why those things are happening. So I'm going to share the screen here and let's do a recap of this. This is mortgage-backed security. As this line trends down, you're seeing interest rates go up. So we back this out here to about the beginning of February. You see this trending line down here. Basically, and that is mortgage-backed securities selling off at a higher or at a lower level, which means interest rates are going higher. So as this line trends down, you're seeing interest rates go up. And you're going to see some bouncing around here, a little bit of volatility here. So back in the beginning of June, we began to get some gains back, frankly, going back this way. And then we start to see effects of the market and this right here back at the beginning of basically in the early part of June, about middle part of June. The inflation numbers came out for that we thought the Fed may have had under control. Looks really bad here. So you see this chart really fall off. That means you saw interest rates go up a lot. And now you're starting to see generally a little bit of recovery with a lot of volatility, a lot of movement around. So you're starting to see, a little bit of, rates get slightly better. Now, let's talk about why that is. Now, first of all, first thing came out today, PCE, the PCE report. And this is really the Fed's favorite measure of inflation. And that shows some cooling off of inflation. So you start to see the investors believe that the Fed has inflation kind of under control. So you see mortgage-backed securities sell off or bought at a higher level, which means lower interest rates. So frankly, right now we're going in the right direction. The other thing that's affecting mortgage-backed securities or bonds in general is you're seeing, stocks really having a tough time right now. So if you're invested in the stock market and you're playing in crypto and all that stuff, you're seeing, stocks really struggling right now. And when you have like all 30 of the Dow stocks are falling, when you have situations like that where people see a volatile market, what you start to see is people moving money out of stocks into bonds to make their money more safer because there's such volatility in the stocks. So you start seeing those people move their money into bonds. Those cause those bonds to usually there's an inversely proportional relationship between stocks and bonds. As stocks go down, usually bonds go up. So you start to see that inverse relationship. So you're starting to see people put money into bonds for safety and buy bonds. So you're seeing mortgage-backed securities, frankly, trade at a higher level, which means relatively lower interest rates, especially over the last 2 weeks since we had this huge fall off here from the inflation numbers. So good news. Now, if somehow, I'll zoom in a little bit here to this chart. If somehow we can get back up into this area here, which there is some hope getting there, if investors really believe that inflation is under control, there is some hope of getting there. You're going to start seeing some really decent, interest rates. If we can get back up to where we were back on this date, like at the end of May, you could potentially see VA interest rates maybe in the back into the mid fours level on non-jumbo. You can see jumbo rates back in the maybe in the high threes level. So you're starting to see, and overall right now, you're starting to see some cool off in the market. And that's because interest rates are having an effect. And that's why I'm telling people right now, if you have the funds to get into a home, you can afford to make that monthly payment for 6 to 8 months, go ahead and get into a home. Because if you wait until this chart gets back down into here and you see interest rates start to drop, you're going to see a flood of people come back into the market when they realize that interest rates are not at 5.5 anymore, and they're back at 3.5 to 4. And it's like, okay, we can handle that. Let's get back into the market. But you're starting to start competing then, when right now you can generally get a lot of homes kind of at asking or something like that, depending on your market. Okay, so I want to cover this right quick. Okay, don't want to go there yet. Let's go with this one. Fed Chair Jerome Powell draws criticism for admitting how little we understand about inflation. Now, this is interesting because this is the Fed chair. His number one job is to control inflation. And I sidetrack here for a little story. My son comes running down the stairs. My 10-year-old, my little Aiden, he's a joy, but he has a struggle. My son's struggle is that he fails to take personal responsibility for anything. All right. So he comes down and he says, "Hey, my wallet disappeared." And I said, "Are you saying that you lost your wallet?" It just disappeared. And I'm like, "You had a role in your wallet disappearing. You're saying you lost your wallet." "No, my wallet disappeared." And I get on, and my son is 10. So I get that, and I have to teach him those things. But the Fed chair, he's like 60 something years old. I shouldn't have to tell you, you have to take responsibility for the actions that you didn't take. So in this, he talks about the war in Ukraine. He talks about supply chain issues. He talks about all of these other things, but not any of those times in this interview did he mention the fact that the Federal Reserve, as of 3 months ago, was actually buying mortgage-backed securities to keep interest rates low. He didn't mention that 3 months ago that the Fed rate was zero, and they didn't take the actions that they needed to take when everybody else saw, oh crap, inflation is coming, it's going to be a big deal. He didn't see the need to actually take any action. So he talks about all these factors, but in no way does he admit or what the Fed actually did. And I found the whole interview to be quite amusing, because I'm like, this guy is the head of the Federal Reserve. He's the Fed chair, and he's talking about how little we understand about inflation, when I would listen to other economists all throughout the COVID saying, hey, we need to start doing something about rates, raising the Fed funds rate, because inflation is going to be a big deal. But we kept it too low for too long, and now we're seeing the effects of inflation. The other things that you're seeing is you're seeing the bond market respond to Powell saying, hey, the Fed must accept higher recession risk to combat inflation. Wait a minute. So he's saying that, hey, we have to be so aggressive about hedging or about stopping inflation that we have to, we might put ourselves into a recession, which is, if you follow this channel, something I've been saying for a very long time. We are trending into a recession. Likely next week, numbers are going to come out to support the fact that we are in a recession. When the economic numbers come out for GDP for the second quarter, 2 consecutive quarters of negative GDP means technically you're in a recession. Now, the official word on that comes out through other means, but you're going to see negative GDP for 2 consecutive quarters, which is usually an indication that you're in a recession. So he's saying, hey, we have to be so aggressive about raising the Fed funds rate that we might risk going into a recession. And that's why you're starting to see the bond market say, oh crap, we could go into a recession. And now you're starting to see these factors of the rates going lower, or bonds selling off at a higher point, which is indicative of pricing being better. Now, next week's going to be an interesting week. If we can continue to press up this way and get into this area on mortgage-backed securities, frankly, these lines illustrate, levels of resistance. I won't get deep into that, but if you can get into this area, man, you're going to start seeing some things really, really take off, and you could find rates really, really rebounding. So if you're in the market right now for a home, I encourage you to get under contract. You do not want to wait until rates are so much lower, because right now is a great time to buy a house, because 6 months ago, you had to put an appraisal clause, go over asking, all of this stuff. Now you have if you're well qualified, you've basically weeded out all the other people. And when rates come back down, and rates go up, rates go down, they will come back down. We still have a supply and demand issue, and you're going to see people rush back into the market and be competing for homes at lower interest rates. So I encourage you to go ahead and get into a home and be smart about this. Take this opportunity so that you're not competing with all the other people that are going to be here when rates go back down. Talk to you soon. Hope you guys got something out of this. I'll see you next time. Have a good one. See you next time on Major Money Matters.